So could we first start with the silver market that you've been following, and tell us what you're seeing on physical flows and price action, and where you think there's latent things that haven't been acknowledged yet?
Yeah, I think the problem with silver is rather like the problem in the oil market. We know that oil in Asia is changing hands at anything north of $150 a barrel, whereas on COMEX, it's sort of 90, not doing anything. There's this sort of disconnection with reality, and the same is also true of silver. The interesting thing is that ever since silver peaked at about 120 at the very end of January, China has been buying it back in quantity. We have the first quarter's figures of their buying of silver, and it is really massive. Some months we're seeing record levels of silver inflows into China. Now, this is a turnaround in China's policy because really until, well, certainly September last year, her policy was to supply silver to the rest of the world in an effort to try and dampen any upward price moves. And this has been a long-standing policy, but that suddenly changed. And it changed really in, I would say, September last year, when China also changed her policy on rare earths, on the export of rare earths. This was after one of President Trump's tantrums, if you like, tariff tantrums against China. So China actually went on the offensive and said, right, look, that's your attitude. You go and get your rare earths from somewhere else. What we didn't know at that time was that China was also doing the same thing with silver. And I think the reason for that is that the U.S. Geographical Survey was recommending to the government, the U.S. government, that they declare silver as a critical mineral. And indeed, the government took that advice up, and it is now, as far as the U.S. is concerned, a critical mineral. China was in the position of, having suppressed the price of silver. She now didn't want to supply the US, if you like, so that the US could just stockpile this new critical mineral. So she'd basically withdrew from the market. Now, we only discovered this really on October the 9th, when the lease rate in London shot up to around about 40%. And the reason for that is that people who had bought forward contracts in silver decided to take delivery rather than sell them out at a profit or loss. And it was really from that point that silver broke through the $50 barrier and subsequently ran up to 120. Well, we have a similar situation today. There is very, very little silver around. The stocks in COMEX have been diminishing. And as we know from China's customs figures, she has been importing fairly heavily. She has continued to export some silver, but not very much. And I guess that is to satisfy existing contracts rather than anything really new. So with China going on to the offensive, buying back in silver, this is now one of a number of things that China has been doing. If you look, for example, at iron ore, she's been stockpiling iron ore. If you look at copper and nickel ore, she's been stockpiling that. And also things like sulfur, urea. These were things that basically were exported in significant quantities out of the Persian Gulf. And now that that supply line is disrupted, China is taking the view, well, we've got to hang on to our own production rather than anyone else's. The interesting thing about sulfuric acid, which again is a major, major export from the Persian Gulf, China was the largest exporter of sulfuric acid. And now what she's decided to do is to stop exporting it completely. Why? Because sulfuric acid is a very important chemical in the refining of non-ferrous ores, particularly copper and also nickel, and to a lesser extent lead. Now, if you look at where the silver comes from around the world, over 50% of it, I think 57% of it comes from copper and nickel refining. So you can see that with the rest of the world deprived of quantities of sulfuric acid, there is a supply problem developing in certainly copper and also nickel. And if you look at the prices of those two base metals, yeah, they've been rising very, very strongly. So given that, copper's been hitting new highs. I mean, it's really performed extremely well since the Gulf situation kicked off. Silver hasn't. Silver's just moved sideways. This is crazy. Now, when you consider that the use of silver in industrial purposes is exactly the same as many of the uses of copper, in other words, electricity use, photovoltaic cells. You've also got electric vehicles and so on. You've also got defense applications and so on. I mean, the two things are basically used together, and silver is the metal which is short of what, there's a shortage of. It is also by far the most important conductor of electricity and also as a thermal conductor. So it doesn't make any sense that copper and also nickel, though that's a slightly different category, should be hitting new highs when silver is just languishing where it is. So the only thing I can conclude is rather like oil being mispriced in paper markets, when you see that physical deliveries are taking place at 50 to 60% premiums in Asia, I think the same is true of silver. So that's an interesting one. Now, it's not just a situation where, the refining of copper and nickel and so on and so forth being threatened, driving up the price of those commodities. Therefore, it should drive up the price of silver. Silver has been in supply deficit now for 6-7 years. The use of silver since the Silver Institute's last report, which was a few months back, has actually increased quite significantly from when Metal Focus would have put together the figures and the estimates, if you like, for industrial use. They thought that industrial use of silver would decline slightly in 2026 compared with 2025, which again was a slight decline on 2024. Now, given AI, given huge great data centers being built everywhere, given the fact that armaments have got to be replaced because stocks in America, Europe, and Israel are just about run out, so that they really are having to accelerate the replacement of missiles and all the rest of it. You can see that silver actually shouldn't be at this level at all. It should be considerably higher. And of course, America hasn't got a hope of building a strategic stockpile unless it goes into the market and aggressively bids, which I guess it wouldn't do because it would just drive the price through the roof. So silver, I think, is mispriced. I think it's probably, it's purely an industrial metal. I know that we push it around on the basis that gold's going up, therefore silver goes up, gold goes down, therefore silver goes down at roughly twice the pace. But that's actually not the way it should be looked at. The way it should be looked at is this is purely an industrial metal with no premium in it whatsoever for, if you like, speculation about the purchasing power of the dollar. The way in which gold is valued, if you like. So that is something which I think is still ahead of us. I mean, you can imagine if the next run in gold, which I think has been brought forward by the war against Iran and brought forward considerably. what happens then is you're going to get a huge, great clash between the industrial demand and new investor demand. Investors who feel that if you want to play the gold game, then go buy silver because it goes up twice as fast. And furthermore, you're only paying 75, 80 dollars an ounce as opposed to 4,500, 5,000 for gold. So there is going to be, I think, an enormous bear squeeze on a paper market system which simply cannot handle it. I mean, here we have gold and silver considerably higher than they were over the course of last year, yet open interest on COMEX is at the lowest levels we have seen in a very long time. I mean, we're talking decades now. When you see a price rise, you expect open interest to expand with a rising price. This is not what's happened. On a rising price, we have actually seen open interest in silver and gold fall. And now gold, for example, I mean, that's recently declined very, very sharply. And it's now roughly 327, 330 contracts, open interest. And I would have said before this that an oversold condition was somewhere around about 400,000 contracts. We're way below that. It's almost as if these paper markets are now irretrievably broken. So coming back to silver, it really does look as if there's going to be a crisis in silver, which could push the price considerably higher. Now, of course, we never know when these things actually kick off. Basically, you're either going to be in it or out of it. And so, my view is that you should be in silver. Don't worry about the short term. Don't worry about it. And when it comes to gold, don't worry about gold either. The conditions are similar, though you don't have the industrial use. It's a pure monetary use. Really, what you're doing with gold is you're selling dollars. And selling dollars is the way to look at it. If you want to sell gold, then you're buying dollars. Do you really want to do that? I would suggest no.